Welcome to Agri-Pulse Newsmakers, where we aim to take you to the heart of ag policy. I'm your host, Andrew Hunnicky. We're joined this week by USDA's Chief Economist, Seth Meyer, fresh after his presentation at the agency's Ag Outlook Forum. He joins us to talk about what the future holds for the ag economy and what challenges you can expect ahead. But first, here are this week's headlines. USDA will invest $1 billion into fighting the bird flu, but still will not authorize a vaccine at this time. Ag Secretary Brooke Rollins introduced a 5-step approach the department plans to use to try and fix the problem, including investing in biosecurity measures at poultry productions, increasing indemnity rates to better reflect market values, importing more eggs from overseas, and removing regulatory burdens on producers to help lower egg prices, which she says should be lower by the summer. Rollins says the department will ask for feedback from states, public health professionals, and producers before authorizing a vaccine, while also working with trading partners to ensure the smallest impact possible. House Republicans passed their budget plan on a 217-215 vote. The goal of the House bill is to pass all of President Trump's spending and tax priorities in one giant package. That differs from the Senate's proposal, which saves tax cuts for a later bill and instead focuses on increasing spending for the military and border security. The House bill would authorize $1.5 trillion in spending cuts over the next 10 years, including $230 billion from the House Ag Committee. The Senate bill would require at least $5 billion in cuts over the same 10-year stretch. Both chambers will need to agree on a plan before they move forward with reconciliation legislation. And finally, the White House has affirmed that tariffs on Mexico and Canada are expected to kick in next week. President Trump postponed 25% tariffs on all Mexican and Canadian exports after Canadian Prime Minister Justin Trudeau and Mexican President Claudia Sheinbaum negotiated a deal to help strengthen American border security. Commerce Secretary Howard Lutnick said both countries still need to satisfy President Trump's demands to continue delaying the tariffs. He also said the president's reciprocal tariff plan could go into effect on April 2nd. The president has also hinted at 25% tariffs on the European Union. Seth Meyer is the chief economist for USDA. We asked him how he feels about the health of the farm economy.
We were in a difficult, it's a complex position because we think about the differences between how crop folks are faring and how livestock folks are faring. And then we also have $30 billion of a disaster assistance coming in. And so the health of the ag economy, I continue to have concerns about the crop side of agriculture because we continue to see tight margins. When you look at the prices we presented today, the expectation is for most prices to move yet lower. Input prices tend to be pretty sticky, and so margins continue to be unfavorable, and unfavorable is probably a kind word for some crops. Even crops where we see maybe there's a little bounce in prices like cotton, that's a bounce from a really, really bad price to only a really bad price. And so I think if we separate that out, I have concerns about the crop side on the balance sheet. Now, if we look at prices, you might have a very optimistic view on the livestock side and say, well, you got record high feeder and fed cattle prices. You know, you've got flat but decent milk prices, hog prices a little higher, egg prices good. You think about all the things in there, and egg price is good. If you have eggs to sell, you're making some money if you're selling them at market. But even then, a lot of that's contract production. On the beef cattle side, we've got record high fed and feeder prices, but at the same time, folks haven't turned the cycle. They haven't felt comfortable enough to add cows back and heifers back into the system. On dairy, things are looking better, and yet they would like to expand. But where do you find enough purebred dairy heifers? There's a constraint there because of the spillover into the beef market. And so you think all of the signals on the beef side, on the livestock side that say, might things look better? There's the but that follows after when you think about expansion in those sectors. Again, we talked about today about the $33.1 billion of disaster assistance that's provided, and we have assumed we'll get out at the end of the fiscal year because that's the signal the administration has given. Get this done. And I say, you know, that's helpful. And farmers, and let's admit that $1 out of your wallet spends the same no matter where it comes from. But I know a lot of your producers out there will say, I'd rather have it than the market than the government.
Egg prices, I want to follow up on that. You know, they have been climbing for a while now because of the bird flu. Secretary Rollins laid out a detailed plan earlier this week to fight the bird flu, and she said she expects those prices to be lower by the summer. Do you see that happening?
Right now, in the WASD, the WASD report for which my group produces, we do quarterly egg prices. And we do see, and some of this is both a seasonal demand and the fact that if we can keep HPAI under control, whether that's through biosecurity audits or other actions, we should see prices continue to come down, see a downward trajectory for the whole year. The problem that we have found ourselves in is for the last 18 months or more, we continue to have incidents, large losses. I mean, if you lose 10 million birds, if you have a depopulation event to 10 million birds, which has happened in several months in the last 18 months, that takes you 2-3 months of uninterrupted expansion in order to recover. And we just keep taking hits and the flock keeps shrinking. And so we need a period. And if we get that period, we will bring those egg prices down. If we get that period of a chance to rebuild, we will continuously press egg prices at the wholesale level down throughout the year.
We'll be back with more from USDA Chief Economist Seth Meyer right after this.
These are the farmers and ranchers who help build the America we depend on, and Farm Credit is here for them, supporting rural communities and agriculture with reliable, consistent credit and financial services. In good times and bad, we provide loans to farmers and ranchers, farmer-owned cooperatives, rural homebuyers, agribusinesses, and rural infrastructure providers. We help agricultural producers feed the world. Learn more today.
I think some of sustainability to farmers just comes second nature. If you asked a farmer, are you sustainable? They'd probably look at you maybe a little funny and say, I don't think I'm doing anything that special, but it really is just what they do. We're all farmers, and our goal is taking the best care of our land, our cattle, our natural resources.
This is my sustainability story.
Welcome back. China has placed retaliatory tariffs on the U.S., but commodities are not impacted by those tariffs. At the same time, President Trump is threatening tariffs on Canada and Mexico. We asked Seth Meyer about if and how commodities will be impacted by retaliatory tariffs.
I hear lots of discussion, and we follow the discussion very closely because we're often asked to do hypotheticals on tariff impacts for the secretary, for other folks. I think right now, we would all say we lack details. We don't know what the action is going to be, but we are preparing ourselves to be able to calculate those impacts because the secretary has directed us to do so. So I think it depends a lot on what kind of tariffs, how broadly, how do they impact agriculture, what commodities might be selected, are they reciprocal tariffs, are these short-run tariffs, is there a deal to be made? So I think it's so complex, we can't go in and talk about, well, what do I think the impacts are? Because I don't know what the framework is, and it could vary pretty substantially.
I want to get your thoughts, too. I know you mentioned a bunch of different tariffs there. Also, the Canada and Mexico ones. It's a possibility that there could be 25% tariffs placed on them as well. Should farmers worry about all of this starting another trade war?
Again, I don't think we know enough. I think there's a lot of discussion about how do these tariffs fit into a broader strategy or a broader policy, and I think that that's well above my pay grade. But what I do think is that I will say that the secretary has, on more than one occasion, noted that she will back the agricultural sector. Right. And for me as an economist, I think it is important that the farmers plant to the market as well, too. So I think that you've got both the secretary stating backing the agricultural sector and just a reminder that you got to plant to the market. That's where your information is.
There is a new study out from Terrain Ag as well, recently came out, says global population is going to peak much sooner and at a lower number than previously thought. What does this mean for farmers and the export markets they've been relying on?
I think Ambassador Dowd this morning talked a lot about that he didn't see an obvious replacement, say, for China. And if we think that this is part of a China effect, or even if you say it's not a population issue, it's a current macroeconomic condition issue, I think that is for our farmers. We would like to serve that growing population, and we would look at trade. However, we're really good at bulk agricultural commodity trade. I think that one of our challenges on the ag trade side is to broaden our ag trade portfolio. And by broaden, I mean both geographically. We're going to have to go out and find those countries where there is population. I mean, when you're talking about global population slowing, that's more in the West and in the United States than it is in Africa and other developing places, who still, there's a lot of window there for growth in proteins. I mean, if you think about Africa and the ability the demand that might exist should their incomes rise, the demand for protein is pretty substantial, and that provides us an opportunity on the bulk side. So I think you've got a spread there geographically in terms of getting into markets and things that you need to maintain, and then deepening those markets. I think for these types of things we're talking about, as their incomes rise, being able to support them with additional higher value agricultural products, meats, higher protein items as well too. So yeah, it's an overall concern because you're looking out there, your demand flattening at some point out there in the future, but you still got a segment of the globe that still will be clamoring for additional protein. And we can either provide the feed or the protein itself.
Seth Meyer, USDA's chief economist, thank you for making some time for us this morning.
Thank you.
We'll be right back with our panel discussion, but first, Lydia Johnson looks at the U.S. and India's trading relationship in this week's Ag by the Numbers.
The United States and India have announced plans to begin work on a trade deal that would expand two-way agricultural trade. The deal will include tariff reduction and removal of non-tariff barriers, according to a statement from President Trump and India Prime Minister Narendra Modi. As you can see on this chart, the U.S. exported $1.7 billion worth of ag products to India in 2023. Almonds and other tree nuts were the top exported commodity at a value of $1.1 billion. Cotton and ethanol followed, valued at about $230 and $150 million, respectively. The announcement came the day President Donald Trump directed administration officials to study reciprocal tariffs that would raise U.S. duties on countries with higher tariffs than the U.S. Reciprocal tariffs could hit India particularly hard, making the trade deal timing even more important for the collaboration of both nations. For Agri-Pulse, I'm Lydia Johnson.
Weeds, razor-thin margins, supply chain disruptions. American farmers need innovative solutions to tackle the threats that impact us all. Their yield is their livelihood and the food that feeds our families. That shouldn't be on the line. Which is why the Modern Ag Alliance advocates for access to essential crop protection tools, like glyphosate, to keep the future of farming in secure, hard-working hands. Get the facts and see what could be at risk.
Regenerative poultry production is a process by which nature can actually recapture and restore the energy that is being taken out of a space.
Farm Credit helped Rehi build his dream of regenerative poultry farming and encouraging fellow immigrants to find community in agriculture.
Nothing beats a farm. I'm just pursuing happiness.
Learn more at farmcredit.com/beginning.
Welcome back to Agri-Pulse Newsmakers, where this week's panel is going to focus on everything dealing with the agricultural economy. Joined this week by Arlan Suderman with StoneX and Scott Irwin with the University of Illinois. And I want to get both of your guys' thoughts on this first question. Arlan, starting with you, sir. What is your reaction to some of the commodity projections we saw from USDA?
Well, I think the most significant thing to come out of these projections is the yield, because for corn and soybeans, that's the yield we're going to see into May, probably the June and July WASDE balance sheets. The acreage is going to change with their planting intentions reports. All the demand estimates are going to change as well, but it gives us a sense of what they're thinking right now. From the acreage standpoint, pretty close to what the trade was thinking. I think if there's a risk to it, it's higher on corn and lower on soybeans. But that's what we'll see out of the acreage survey that comes out, and they'll be asking farmers here over the coming week.
No big shockers in the numbers. Compared personally to my own expectations, I think that the risks are that trend yields for corn are actually higher than 181, in my opinion. Probably at least 2 bushels higher, maybe even 3. And that really starts making that new crop corn balance sheet look kind of heavy. On the other side, I'm a little lower, about a bushel lower on soybeans, which would then begin to push us below 300. So based on the acreage there, I would be a little more bearish on corn and a little more bullish on soybeans than the USDA is. We'll see when the acreage comes out.
I'd like to get your thoughts too, Scott, particularly on land values. How do you see land values being impacted by the projections we've seen?
I don't think that they're going to have very much of an impact. We've certainly seen a softening of the land market in the last year, but not a lot. Just maybe taking the top off that market, it stayed pretty solid, and I expect it to stay solid as long as interest rates don't go up another leg.
Farmers and economists have been keeping a very, very close eye on the threat of tariffs from the Trump administration for quite a while now. Like both of your guys' thoughts on this one, Arlan, we'll start with you again, sir. How would American commodities be impacted by retaliatory tariffs, whether it be from Canada, Mexico, China, or even the European Union, which the president has hinted he may impose tariffs on them as well?
Yeah, it's a high-risk type of gamble that we have here. If the tariffs create an escalating trade war, we're dependent on those exports. They create a lot of problems for agriculture. If, on the other hand, they bring countries to the negotiating table to where tariffs are decreased for what we send, then it helps us be more competitive and helps increase trade. So it's kind of a high-risk opportunity here on how it's going to play out. Mexico, our biggest buyer of U.S. corn, second largest importer of U.S. soybeans. Canada, biggest importer of U.S. ethanol. Those are all factors that we have to take into consideration that are at risk. The question is, can Mexico get their corn elsewhere for cheaper? Probably not, without significantly increasing their food inflation problems. What about the pork industry? They import a tremendous amount of pork from us. Can they get the pork elsewhere for cheaper without significant food inflation? Probably not. So I think everyone's going to try to work things out in the end, but it's going to keep us very nervous until it happens.
I agree with everything that Arlan said. One thing that I think may not be getting enough attention in terms of potential problems, a lot of discussion about supply chain disruptions in the North American automobile industry because of putting these large tariffs on Canada and Mexico for pretty obvious reasons, but some of the same things can happen in the livestock sector, particularly pork, with regard to the integration in hog production between Canada and the U.S. and cattle between Mexico and the United States, feeder cattle coming from Mexico. So could be some surprises there.
We'll be back with more of our panel discussion right after this.
I think some of sustainability to farmers just comes second nature. If you asked a farmer, are you sustainable? They'd probably look at you maybe a little funny and say, I don't think I'm doing anything that special, but it really is just what they do. We're all farmers, and our goal is taking the best care of our land, our cattle, our natural resources.
This is my sustainability story.
Weeds, razor-thin margins, supply chain disruptions. American farmers need innovative solutions to tackle the threats that impact us all. Their yield is their livelihood and the food that feeds our families. That shouldn't be on the line, which is why the Modern Ag Alliance advocates for access to essential crop protection tools like glyphosate to keep the future of farming in secure, hard-working hands. Get the facts and see what could be at risk.
Welcome back. We asked Scott Irwin with the University of Illinois how soon farmers could start seeing impacts from any potential tariffs if President Trump goes through with them.
There's just so many unknowns. What we do know is, the risk is large in terms of basic ag commodity prices. The best template we have is what happened under Trump 2.0. Soybean prices dropped over $2 a bushel when China dropped the hammer. And that's still a possibility, in particular if we get into a big trade war with China again.
Arlan, should farmers be concerned that these possible tariffs could end up leading to another trade war?
Well, absolutely, that has to be a concern. But I think what often gets missed in this is the strength of the dollar versus the strength of the currencies of the countries that buy from us, like China, the yuan, as well as those countries that compete with us. If we look at the tremendous advantage that gives Brazil, for example, selling to China, geopolitical tensions aside, China's going to buy all they can from Brazil and Argentina just based on currency exchange rates. That's going to be advantageous to them unless they're forced to under some trade agreement. That's going to happen regardless of tariffs that we have. But the tariffs are going to continue to deteriorate the relationship because we're threatening the very economic health of China, and they don't take that lightly.
And I'd like to kind of wrap as well, too, with this new study coming out from Terrain Ag. It says the global population is going to peak much sooner this century and at a lower number than previously thought. Arlan, I'd like your thoughts first, sir. Is American agriculture going to have to start adjusting at some point to declining export markets?
We are. I mean, when you look at both corn and soybeans, 50 years ago, we had 75% of the global market share. And today it's much lower, in the neighborhood of, depending on the commodity, 25 to 30%, depending on the year. So we already are. We're having to find domestic sources of demand. The liquid biofuels is one example, but we've got a lot of question marks about that. You know, I've been in this business for over 4 decades, and I've seen us come up and develop new demand sources every time that we've had low prices. Unfortunately, that's typically required that we have several years of low prices before we created those new demand sources. So I do believe we're going to do so. That doesn't mean that we're going to have smooth sailing. There's going to have to be hard times to create those opportunities for creating new demand.
That's probably a fairly distant horizon issue in terms of population growth. I'm more concerned about the short run impacts of not fewer people, but basically skinnier people through GLP-1 spreading around the world and reducing food consumption very quickly in a major way. And I think we're already starting to see that. So not fewer people, but skinnier people is going to be, I guess, a simple way of putting it.
Certainly a lot to be looking forward here as the future of the ag economy unfolds. Scott, Arlan, I want to thank you guys so much for joining us today. We'll be back with more Agri-Pulse Newsmakers, but first, Lydia Johnson has an update on poultry and dairy cattle bird flu cases in this week's Map It Out.
Agriculture Secretary Brooke Rollins has announced a 5-pronged approach to combat the bird flu outbreak as the number of infected poultry and dairy cattle rises. Her announcement designates up to $1 billion to improve biosecurity measures, invest in vaccine development, and increase indemnity rates to better reflect market value. As you can see on this chart, bird flu cases have been identified in dairy cattle in 17 states. California has had the most cases, totaling 737 since March of 2024. Texas, Colorado, Michigan, and Idaho have had between 27 and 64 cases each. Poultry outbreaks have been widespread, reaching all 50 states and nearly 150 million birds since February 2022. Iowa has the largest number of identified birds at over 30 million in 44 commercial and 22 backyard flocks. Ohio and California have had over 23 million infections each. Rollins stopped short of authorizing use of vaccines in her bird flu strategy, but said the plan should lower egg prices in the next 3 to 6 months. For Agri-Pulse, I'm Lydia Johnson.
Elevate your game and set your sights on Denver for the 2025 Commodity Classic with technology that moves faster than fluctuating markets and information as important as $1 million rain. Commodity Classic is designed for growers of all kinds, where you'll broaden your horizons as you improve yield and ROI 1 bushel at a time. Take your operation to new heights and join us for Elevating Excellence in Agriculture, March 2nd through 4th in Denver. Learn more at commodityclassic.com.
Looking closer, seeing further. That's how we do it. At Curious Plot, we're driven to find what's next for agriculture, animal care, and food. We stay curious because that's what it takes to grow understanding. That's how we plot strategies and tell stories that get results time after time. Marketing, communications, and consulting that look closer and see further. Curious Plot. We can't wait to help you tell your story.
Thanks for joining us on this week's Agri-Pulse Newsmakers. Here's what's on the horizon next week. There's still time to register for our annual Ag and Food Policy Summit on March 17th. We have a full agenda set, including discussions about what's at stake for taxes, trade, and technology in the upcoming year. Both chambers of Congress will be in session next week. A House Ag subcommittee will meet Tuesday to talk about producer perspectives on the state of the livestock industry, and my colleague Lydia Johnson will bring you a special show next week from Commodity Classic in Denver. We'll continue to follow the latest on all of this and more on our website, Agri-Pulse.com. For Agri-Pulse, I'm Andrew Hunnicky. Thanks for watching.
Newsmakers is a production of Agri-Pulse Communications. You can also find our new content on YouTube and wherever you get your podcasts. And don't forget to follow Agri-Pulse and our correspondents on social media to get breaking news and more. For agriculture, trade, food, environment, and regulatory news, your source is agripulse.com.